Oil prices soaring. An OPEC-fueled rally sending crude prices higher, now up about 20% just over the last month. A lot of this as things have started to open up, and we're looking at an economy that we hope is going to be better. But that's not all of the story here. Brian Sullivan joins us right now. He's got more on that front. Good morning, Brian.
Hey, good morning, Beck. I mean, there's a lot going on. It's the stuff you mentioned, plus it's the attacks on that Saudi port yesterday. Really, oil, let's get to that first. Oil rising on that a little bit today, although it's flat, but it's been up the last 24 hours or so. In fact, was above 70 on a Brent crude level last night. You had a water-based drone attack on a storage facility in Ras Tanura. Ras Tanura is the biggest oil export port in Saudi Arabia. It's also home to the largest and oldest refinery in Saudi Arabia. And missile shrapnel, by the way, falling near Dhahran. Dhahran is a name that may sound familiar. It's not only the headquarters of Aramco, it's also the home of many American oil workers who live and work in Saudi Arabia. Now, thankfully, no loss of life, but it does add to tension in the region because you've had some missile attacks backed by Iran into Iraq as well. And all of this adding to what you alluded to, Becky, that already tightening market. You've got growing demand. Of course, we know that as they're getting out, they're largely driving. They are not riding subways. Air travel has picked back up as well. And production has not kept pace. All in all, that factors into 2021 so far being the year of oil and oil stocks. Oil's up 38% this year. It's higher right now than it was just before the pandemic. And that move in oil has many of the beaten up oil and gas stocks soaring. The XOP, which is an oil and gas exploration and production ETF, is up 53%, Becky, this year. It's like we're talking about Bitcoin or something. It's oil. Goldman Sachs staying bullish, by the way, last night coming out with a note raising their targets for this year and next on oil. And they see an 18% return for most of their what they call upstream stock coverage. The biggest of the big names, the Chevrons, the Conocos, the Exxons, and more. It's been quite a surprising start for oil and fossil fuels in 21.
Hey, Brian, normally when you see oil prices start to pick back up, that would be the time when the American companies would start to drill more, particularly in the Permian Basin. It makes it a lot more profitable if you're looking at higher prices. But this time's different, right?
Are you suggesting the oil industry responds greatly to minor price swings in order to best serve their own interest, Becky? I am shocked. All right, it's too early for that. You're exactly right. So it's interesting. On the OPEC virtual meeting last week, I asked the Saudi energy minister, Abdulaziz bin Salman, I said, do you have a message for U.S. oil companies? Or what would you ask them? Or what would you tell them? Or something like this. And he just sort of course, it's over Zoom or whatever. He said, the age of drill, baby, drill is over. The Occidental CEO, Vicky Holub, kind of echoed the same sentiment, that even if prices rise, to your point, production and new drills in the ground might come up a little, but might not come up a lot. In part, if we ban fracking on federal lands, which is part of the Biden administration's plans, that takes about 15% of available land off. You've also had deals which have made fewer players bigger so they can better control production. And unfortunately, a lot of those smaller wildcatters that you kind of referred to, Becky, they went out of business. And so I think you're right. Production might go up, but nobody I've talked to thinks we're going to get to 13 million barrels of oil a day of production anytime soon, if I don't want to say ever again, but for years to come.
Shepard Smith here. Thanks for watching CNBC on YouTube.